All right, everybody, welcome to the end of the year breakdown, right? I'm Joshua Salvetti, right? The host of High Performance Trader. And today we are going to be breaking down, obviously, the week ending in 12/30/2023. But more importantly, right, we're going to be breaking down our goals for 2024, right? This year has been crazy. It's been insane. It has been a journey, right? Through deep personal development, right? We've been diving very deep into human behavior, the way we trade, why we trade the way we do, right? So we are going to be breaking down exactly that. We're going to be diving into what actually works, right? Like consistent behaviors. What actually do we do on a day in, day out basis that leads to consistent results, right? What sort of way? Because becoming systematic is just it's the key. It's the only way, right? Until we can approach the market in a systematic behavior every day, the same, right? Disciplined, structured, focused. We're going to see inconsistent results. So that is my goal today in this webinar, is kind of to break down the end of the year, some goals, some characteristics, some attributes that I want to bring into 2024, and so on and so forth, right? So that's basically what I'm trying to do. Welcome everybody. We got Debo. Debo, can you hear me? Oh, hold on. Let me check my audio real quick.
Yeah, I can hear.
You got me, Novak? Awesome. All right, so maybe
Yes, sir.
maybe something's going on over there. All right, these audio issues, they're not going to hold us back though. All right, hold on 1 second. Let me see something here real quick. Okay, cool. All right, so we're just going to dive right into it. Okay, so this week was a short week due to Christmas. But it was still yet tons of opportunity. And one of my goals this week was to really be more selective with my criteria for entering a trade, and selective with my criteria for exiting a trade, right? Like, once again, all too often, we approach the market and we're trying to, make money today, right? How could I make money? How could we end green, right? How can we just, have a good day, right? And it's like we're so focused on the wrong things. Instead of worried about making money, we have to be worried about our process. And not even worried about our process. We just have to demonstrate it, right? And that's going to pretty much be our topic for this webinar, is like, how can I demonstrate my process on a daily fashion, right? And for me, that means it's got to be pretty simple. Because if it's anything complex, I'm not going to be able to demonstrate it properly. So we're going to go over some trade examples and trades that we took, right? And once again, open print is like a gift from God. Like, if, like, talking about simplifying the process, open print is there to really help you every day understand a bullish scenario or a bearish scenario. Obviously, you have to be aware of your surroundings and understand, like, hey, pre-market high is right here. What does it look like in a bullish scenario, right? Because one of the issues I used to have when I was trading is we would rip into pre-market high and we get some selling, right? So automatically I used to associate this with a supply rejection, where sellers were going to come in and just reverse the whole setup, neglecting the fact that buyers were clearly in control here at open print, and this was just a minor pullback. A great way of doing that, Debo is having audio issues, but he put me onto the Fibonacci retracement, right? So whip out your Fibonacci, right? Be like, okay, is this being respected? Is this respecting the 50?
Hey, Josh, it may just be me, but I can't see any screen sharing.
Oh, thank you, Novak. Let me I must get so excited for these webinars, and I dive right into them without sharing anything. No, thank you, thank you, Novak.
It could just be a network issues,
Yeah.
though.
Can you
I don't know. It might just be me.
can you see my screen?
No, just the two
Oh,
little
okay.
dots kind
Okay.
of
Hold
going
on.
round in the middle.
Hold on. Oh, okay. Hold on. Let me try this, because I am currently sharing it. Let me see though. Let me see if that makes it a little better for you. All right, let me share a different screen. Maybe it just doesn't like that screen. Let me know at any moment if it pops up. How about that one?
Yeah. Now it's showing your, yeah,
Awesome.
it's sharing again.
Okay, perfect. Yeah, just
Oh, there we go. Brilliant.
awesome. Let me know if that changes.
I
But
will do.
just so like what I was just saying, right? Price rips into supply. We get some selling. Right now, just because we got some red candles here doesn't mean this thing's going to sink, right? We have to ask ourselves, what are the current conditions of the market and what does that bullish scenario look like? So, every day with my pre-market plan, I'll map out a bullish and bearish scenario. And this is usually how it works. And open print is going to give you the clue you need to either go bearish or bullish, right? And that's kind of like my systematic approach. So there's a couple other variables that go into there, but like every day, that's my goal. A bullish and bearish pre-market plan and a mindful awareness of what's happening around open print. Right. And that's not just the first candle. That's a retest of open print. That's, some sort of structure being built off open print, giving me and leading me towards a specific direction for the day. So to map this out correctly, let me just throw that right there because that's going to be our first target. Previous day high. Let me label that previous day high. And then it's going to show that on the right. And then I'm going to right extension it. And now I'm going to make the color blue. Okay, hold on 1 second. Try to. So, all right. So once again, bullish bearish scenario. So in a bullish scenario, buyers defend open print. And now check out the Fibonacci retracement being respected. What's also being respected is this little pre-market structure level. So I want everybody to use those pre-market levels for structure, right? This might not be pre-market high. It might not be anything significant, but it is a structure point. So I'm a very big, structure sort of trader, right? Where I need to see break and retest to symbolize strength, right? So once I see this green candle coming in, this is a really good indicator of your bullish scenario, right? So if buyers are defending this structure point, it's telling me, hey, buyers are in control. Now that's not necessarily a place I would have took the market long, um, because it's already been extended. But now we're like, okay, where's previous day high, and what do I need to see to take a move up to it? Price just started a rally. The first trade of the day I took was off this structure point, right? Because I was targeting that previous day high. Another thing, structure's holding, and the 9-day EMA is holding as well. So this is definitely a perfect setup for me where I'm going to target previous day high and try to capture the move to the upside, right? Obviously, large money had other plans, and I want to show you how I was able to kind of cut this trade before it got ugly. Because going back to entering on structure, I'm looking to exit on structure as well. So right once we came down for this retest down here, I ended up taking the market long, and my stop loss was right below 4748. And then we carry up, and then once price just kind of destroys the structure of this, comes down, makes that little lower high, boom, my stop loss is hit right here, out of the trade. See, this right here is what it takes to actually see results. Any trader could put on a perfect trade, but it's the trader that can deal with his losing trades, right? That is going to see good results. You know what I mean? Like we're going to be put in bad scenarios, and it's not all about perfect analysis, perfect trades every day, right? It's actually the opposite. It's about seeing, for me at least, it's about seeing my approach, my trade plan, and acting on it, right? Am I worried about the trade going my way? No. All I'm worried about is putting on my trade, putting in my stop loss. That is all I can control. right? I'm not going to overanalyze the scenario, right? Because there is nothing worse than approaching the market way too analytical, right? Where you're trying to have the perfect trade each and every single day. It can become extremely stressful. Instead, remove that from your trading and focus on your process, right? Because this same process, which didn't work my way here, ended up making me a marvelous return on Qs that day, right here. So once again, this was a really really cool trade here. But we had this 410.23 level that we couldn't hold above. It was like this really significant level. And I kind of had my eye on a short play, I'm not going to lie. And this is why I don't like using trend lines, because they kind of make me biased. But we had this triangle forming, and either sooner or later we're going to break out. Now, going back to what we were talking about, I've been increasing my criteria for entries, which means I'm not taking every break and retest I see. I need to see some sort of battle structure, and obviously a very good risk reward. So 410, this was the all-time high at the moment. So Qs look something like this. I had downside targets all the way to open print, and I'm just kind of letting the market do its thing. And I'm being extremely patient. Like I told you, I took that first loss, but I contained it. SPY was continuously making really, like it was just moving forward. And you could see it was battling its previous day high. Now, once SPY broke its previous day high, Qs was starting to play with this level again. And once we started to get strength, I just entered this trade. Once again, not overthinking it, just understanding the story, tight stop in. And when you're approaching it from like a state of like, I don't need to get in the market, you're not hopping at every break and retest. You're not hopping at each and every single you know, opportunity the market gives you. But the biggest reason I entered this trade here at this time is this 410.23 level. Check it out. I'm using the 9-day EMA a lot, right? So I'll use this for, obviously, if we close above this, it's a sign of strength. If we close below this, it's a sign of weakness. So if I'm short here, which I wasn't, but this is how I think. I'm going, if I'm short here, what do I need to see to get out of this trade? Because remember, I'm in my mind, I'm thinking a short play down to open print. So we're selling off, we come up, we retest. I didn't like this retest, so I didn't take the market short. Notice we closed above the 9 DMA, right? Showing strength. So I didn't go short, because this is definitely one of my short plays. But when we're making higher highs like this, I'm sorry, lower highs, and we're closing above the 9-day EMA, there's no bearish structure, I don't act. And then I'm going, okay, what do I need to see to stay short? Definitely not this, right? And this is how I want everybody to go into every trade they take. It's always 50% bullish, 50% bearish. Oh, 70% bearish, 30% bullish. And